Ever found yourself in a bit of a tight spot needing some cash, like fast?
Uh-huh.
Or maybe you've just been scrolling online and, those ads keep popping up.
Oh, yeah, the ones promising quick, easy loans. Tap here, get money.
Exactly those. You're definitely not alone seeing them. So this deep dive, we're pulling back the curtain on two names you might have seen around, Ready Loan and Lency.
Right.
Our mission today is really to unpack what these mobile lending apps are all about, how they work, the promises they make, and I think most importantly, what you, the user, really need to know.
Yeah, what to watch out for.
We've gone through the sources to try and give you a shortcut, basically, to being well-informed about this whole kind of fast-moving corner of finance.
That's a good way to put it. And Ready Loan, well, it's often listed as Ready Loan's fast mobile loan. It's basically a mobile app designed for those small, short-term cash injections.
Okay.
Their stated goal, to be quick, convenient, get you money for unexpected bills or, maybe a deal you want to jump on.
Okay, so Ready Loan is one name, but you mentioned another one popped up in the sources, Lency.
Ah, yes, Lency.
Is that just another app or is it something bigger? What's the connection there?
That's a really crucial point. What we found digging around is that Lency doesn't seem to be just one app. It looks like they might be the developer or a closely related company behind several of these platforms.
Oh, interesting. Like a network.
Kind of, yeah. We saw another app, Faircash, explicitly linked to Lency. So you might download Ready Loan, but you could actually be dealing with the same sort of mothership company running a whole bunch of these.
Right, not just standalone apps then.
Seems like it's more of a portfolio.
Fascinating. Okay, so knowing that, let's talk about the experience. If you download one, how easy is it, really, to get a loan? What's the process like?
Well, they really push the easy, fast, and convenient angle. A big selling point is no paperwork required.
Yeah, I bet.
From what we gathered, you usually just, create an account, confirm some basic ID stuff, and then boom, you can apply. It's all designed to be super smooth, remove those hurdles you get with, like, a traditional bank.
And the actual loan amounts, are we talking like $50 for coffee or something more substantial?
It seems to range. Sources mentioned anywhere from a few $100s, maybe up to several thousand. They gave examples like $500 to $2,000.
Okay.
And for listeners elsewhere, we saw things like AED 1000 mentioned too, which is about 270 US.
Roughly, yeah. And repayment.
Can be pretty short.
Yeah.
Often looking at 65 days on the low end, maybe up to a year, so like 3 to 12 months.
Okay, so the application sounds like a breeze, money's quick. But, there's always that little voice saying, if it sounds too good to be true.
Mm-hmm.
Let's talk costs. What do they claim about interest rates and fees, and what did the sources really uncover? This feels important.
It's probably the most important part, yeah. On the surface, they'll talk about flexible loan rates, maybe a maximum APR, that's annual percentage rate, of around 24% per year.
Which sounds, okay, maybe, manageable.
Compared to some things, maybe. And they often boast zero transaction fees, no hidden fees. Sounds pretty clean.
But there's always a but.
There's always a but. The critical thing, the real insight from the sources, is that classic fine print situation.
Ah, the fine print.
Exactly. While that 24% APR might be advertised, you dig into the full terms and conditions, and suddenly you find, well, maybe monthly service fees or pretty steep late payment penalties if you miss a payment.
So the advertised rate isn't the full picture.
Not even close sometimes.
Yeah.
It seems like a strategic choice.
Oh.
Make it look easy and cheap up front, but the real profit might come from those extra fees, especially if people struggle to repay on time.
It's like convenience hiding the real cost.
Yeah, convenience is camouflage. That's a good way to put it. The business model isn't just the interest you see. It's often built on those penalties that catch people when they're already struggling.
Yeah.
That's kind of the engine underneath.
Wow. Okay. That difference between the headline rate and the fine print fees is a huge takeaway. Definitely something for you, the listener, to watch. What about security then? And privacy? They're handling sensitive info.
Right.
How do they figure out if you're good for the money and what happens to your data?
Well, the developers generally say your info's secure, won't be shared without permission, the usual lines.
Standard stuff.
But here's the critical bit, the nuance. They may ask for permissions to access data on your phone, things like your SMS history, maybe other things.
They text messages. Why?
To assess creditworthiness, apparently. Instead of just a credit score, they're looking at your digital footprint.
Huh.
So that raises a big question for users, doesn't it?
Yeah.
How much of your data, your privacy, are you willing to trade for that instant loan convenience?
That's a serious trade-off, especially using SMS.
It is. And it's becoming more common in these digital finance spaces.
Hmm.
Your phone activity, in a way, becomes part of your credit check.
It's a totally different way of looking at credit worthiness.
Hmm.
And speaking of that, some apps, sources said they don't even require a credit history.
That's right.
That must be a huge draw for some people, right? Like a fresh start if your credit isn't great.
Absolutely. Think about it. Maybe they look at how reliably you pay your phone bill, or utilities, things paid through your phone, or even patterns in how you use apps. It could be anything.
So they're using alternative data.
Exactly. It broadens their reach way beyond people who qualify for traditional bank loans. And they often dangle a carrot, too, like promising a quick credit limit increase if you repay on time. That makes it really appealing to a wider group.
Okay, so they're reaching a lot of people, and it feels like you see these apps everywhere now, YouTube, social media, those ads promising quick cash.
Yeah, they're hard to miss.
What's the deal with all the ads? Is it just about getting downloads, or is there more to it?
You've hit on a really significant point there. That mention of contains ads in the App Store listings.
Mm-hmm.
It's key. It's a big part of the business model for many of these.
How so?
Well, first, there's the advertising for the app itself. Like you said, users report seeing tons of ads for these loan apps everywhere online. YouTube, Facebook, Instagram.
Yeah.
And those ads are often really catchy, promising super fast, hassle-free money. Sometimes sounding, frankly, a bit too good to be true.
And it doesn't stop once you download it, right? I've heard people say they see ads inside the app, too.
Precisely. Many free-to-download apps, not just loan apps, rely on ad revenue.
Yeah.
That's how they make money if they're not charging you up front.
Okay.
So you'll see banner ads, pop-ups, maybe other promotions right there while you're trying to manage your loan or apply. It's a monetization strategy.
So ads are coming at you from all angles.
Pretty much.
Yeah.
And if we connect this to the bigger picture, it really highlights the need for caution, for user vigilance. There's a lot of talk online, places like Reddit, about whether these ads are misleading or worse, could even lead to scams.
That's worrying.
It is. So the advice is always be cautious. Some apps might have those hidden high rates or, shady practices that aren't obvious from the flashy ad you saw on YouTube.
So convenience is great, but you've got to balance it with some serious checking.
Absolutely. Scrutiny is key.
Okay, we've talked about the ease, the potential costs, the data, the ads. Stepping back a bit, how do apps like ReadyLoan, LendC, how do they really change things? How do they redefine getting credit compared to, say, walking into a bank?
Oh, they're absolutely transformative, I think.
Yeah.
You can see them as this nimble, digital-first alternative to traditional banks.
Nimble, I like that.
What they've nailed is speed, getting funds potentially in minutes or hours. And the process is almost paperless, right? It relies on digital checks, not stacks of forms.
Less bureaucracy.
Way less.
Yeah.
And that shift we talked about, using alternative data for credit scoring,
Right.
that just blows the doors open for millions who might not qualify for a traditional loan. It fundamentally changes who can get credit and how they get it.
Right. It's a whole different landscape.
Definitely.
Okay, so just to recap for you, our listener, thinking about all this, these mobile lending apps like ReadyLoan and the ones linked to LendC, they definitely offer incredible speed, real convenience when you need cash quickly.
No doubt about that.
But as we've unpacked here, it's just so essential to be aware. Look closely at the difference between the fees they advertise and what's actually in the terms. Understand how your data permissions are being used, and be mindful of those advertising practices, both the ads for the apps and the ads within them.
Mm-hmm.
Knowing these details really does empower you, doesn't it? Helps you make informed choices in this pretty fast-changing digital money world.
Absolutely. I think the critical takeaways from what we've seen are just that.
Yeah.
Yes, you get speed, you get convenience, but you have to pay close attention to the true cost of borrowing.
Right.
You need to understand what data you're giving up and how it's used. And you need a healthy skepticism about the advertising. That kind of critical thinking isn't just like a nice to have. It feels necessary with these platforms.
So here's a final thought maybe to chew on. In a world where getting cash can be as easy as just a few taps on your phone, how does really understanding this stuff, doing these kinds of deep dives, how does that empower you to navigate your own financial choices with more confidence?
Yeah, that's the key question.
And what does this kind of instant access to credit really mean for the future of, say, traditional banking?
It's worth thinking about that balance, isn't it, between speed, convenience, and doing your homework in this digital economy.